Welcome to California in Focus. I'm your host, Madeline Shannon, joined today by the Center Square's investigative reporter, Kenneth Schrepp. Kenneth reported a story this week about CalPERS, the state's public retirement pension system, hiring a new diversity, equity, and inclusion chief to advise CalPERS on how to best integrate DEI practices into investment strategies. Kenneth, tell us more about what you found in your reporting.
Well, a few fun clarifications here. This is a C-suite position, right? She is the Chief Diversity, Equity, Inclusion Officer, and her job is to integrate DEI principles into all aspects and all operations of CalPERS, state's main state retirement and pension fund, including, again, the document here from the state says specifically, including investment practices. And then this also means that recruiting staff for DEI-informed proxy voting and ESG investing. The proxy voting aspect is interesting here because, you can see the state is managing $500 billion on behalf of its retirees. So it has all of these votes for these shares that it owns, and it can actually influence how these corporations are governed, what these corporations decide to do, who they decide to hire, what their policies are. A lot of that can be done sometimes with shareholder votes. So it's interesting to see that this DEI-informed proxy voting is part of this individual's portfolio, especially when this individual has no finance experience. That is zero finance experience. In fact, if you look at her career and her background, this individual has mostly been a DEI officer for most of her career at various, very large, successful corporations. But it does bring up some questions as to why this job description or job description document posted on the California HR website has so much to do with actual investing, right? They're not just overseeing staff. It says talking about actual investing practices and collaborating with the actual investment managers. It's very suspect here.
And we know that this individual, Ms. Slate, is tasked with advising CalPERS on DEI principles and investment strategies. Did you get any indication of what that's supposed to look like?
Some of these include the commitment to sustainability, to social responsibility, and, quote, equitable outcomes. Part of these are equity-driven investment strategies. And no, I don't think they were talking about private and public equities. They're talking about equity in the sense of diversity, equity, inclusion. And I've talked to some people about this, including a state lawmaker who's an expert in pensions. And there are questions here about, okay, well, if it's an equity-driven investment strategy, does that mean the investment strategy is about what's number one for the people who actually need this money to retire? This is important because when you look at CalPERS, you see it's got a $166 billion shortfall. 84% funded is actually not that bad compared to the rest of the country. Historically, though, CalPERS has been over 100% funded. It's just there were changes to what benefits are due to people, so the benefit side of the equation has gotten a lot heavier. Meanwhile, CalPERS has been putting a lot more of its money into, murkier, possibly more volatile, but definitely murkier private equity and private debt market investments that are supposed to have higher returns. But, with greater murkiness, it's harder to sell these things. You don't really have asset price discovery until you sell the asset, right? Because they're not publicly traded. And you don't really know what's happening on the back end with possible deals, who's getting paid what, where this money is going. So there are a lot of questions that we have had about that. Earlier, I guess last year, we came out with a story showing that CalPERS had lost 71% of the money it had put into a clean energy and technology fund that it had created. And it wasn't actually supposed to tell us or able to tell us what investments it made and how it lost that money at a specific level, because there is an exemption to the Public Records Act for alternative investments, which includes venture capital and private equity. So we can't find out how they lost this money or what they're doing with it.
And going back to why CalPERS wanted to hire a DEI chief, someone to handle DEI initiatives, did CalPERS tell you why hiring someone to handle DEI is important to them?
They didn't answer direct questions from me about that. They say that they want to, quote, by embedding DEI principles into its investment framework, CalPERS can drive systemic change within the financial ecosystem while aligning its investment strategies with its mission and values. They also say the position extends beyond traditional DEI matters. So if you're reading between the lines here, there does seem to be a desire to shape investments that align with certain political outcomes that people at the state might or might not support, and even use these retirement funds to achieve political outcomes at businesses that receive investments, or places that are not just businesses, but maybe investment groups or others that are receiving money from the state's retirement fund for investment.
And do you think this could be beneficial to CalPERS investments? Will this help the agency or the people whose pensions are on the line?
The argument I hear from CalPERS is corporations that are more diverse, equitable, and inclusive have stronger returns over the long run. I have seen academic data in recent years. First of all, that was an original study from, I believe it was McKinsey, that was completely debunked. Very poor methodology, and it was just revisited in the last few years, I think. Again, I don't have it up with me, but I believe a new study was done and found that it wasn't even true. So we're making a lot of false assumptions here. What some might say is having a investment philosophy of maximizing safe returns for pensioners is probably the best investment strategy beyond adding additional qualifiers or objectives beyond that.
Well, thank you so much for sharing your reporting with us, Kenneth. This has been California in Focus. I'm your host, Madeline Shannon. Thank you for joining us.